everybody. This is Paul Cyan, real estate agent with United Real Estate Home Connections, licensed in the state of Ohio and Kentucky. And with me today, I have Kay Battle. She's an investor herself, and she also works for, I believe you're part owner of the hard money lender company. So we're going to talk about a little bit about her background, and hard money lending. So Kay, thank you for being on. How are you today?
I'm doing great. Thanks for having me, Paul.
Thank you. So why don't you tell us a little bit about yourself, your background? How did you get started? How did you get started in investing, first off?
Yeah, so as you mentioned, I am a real estate investor. I actually started in 2008, which was right after the market crashed. And so, as we all know, there were tons of deeply discounted and foreclosed properties on the market. And so I just saw an opportunity to kind of jump in, low risk, not much to lose. So I tried it and it worked out great. And so ever since then, I've been actively investing.
Very nice. Yeah, that was a great time to invest. I wish we had actually sold a property at that time that just wasn't performing well, and it was distance-wise, it was too far from me. Why don't you tell us, how many units do you own currently?
So currently I have 35 units. They range from single families all the way up to nine units. So it's a mix of types of properties, but total 35 doors.
Okay. Are they all in the greater Cincinnati area?
Yes, all
Okay.
in Cincinnati.
Are you still acquiring properties, or what are your strategies or goals now?
Yeah, so I'm currently acquiring properties. I actually have a property under contract at the moment. Mostly what I'm focused on now is rehab, so flips,
Okay.
just to build up my cash reserve, and then I'll probably purchase something to hold next year.
Okay. And how are you identifying your flips? Are you finding on-market deals, off-market deals?
Both. So on market, I use wholesalers to look for off-market deals as well. So it's a combination.
Okay. Yeah, in this market, it's a lot of the on-market deals are highly competitive, and a lot of them
Yes.
don't make sense.
Yes, very true, very true. Very different from 2008.
Why don't you tell us about your company, the company that you work for that's a hard money lender? What's the name, and how long have you been with them?
Yes, so as you mentioned, I'm a part owner of Common Sense Capital Solutions. We provide alternative funding for real estate investors and also small businesses. We've been in business for about a year and a half now. So started at the beginning of 2018, and we just help people find solutions, basically.
Okay, so primarily you're doing mostly hard money loans. You don't do anything conventional.
Well, so actually we do both. So I
Okay.
can do anything from, a few months all the way up to 30-year terms, depending on the situation.
The primary focus of this podcast is more the hard money loans.
Yes.
Not everybody's familiar with that. Most people are familiar with a 30-year mortgage, 15-year mortgage. So tell us about a hard money loan. I mean, what exactly is a hard money loan?
Yeah, so hard money loans are typically used by real estate investors who either can't obtain conventional financing, or conventional financing doesn't make sense for the situation. So maybe they have a property that they only want to hold for a short period of time, and they don't want to be tied down to a 15-year or 30-year mortgage that might have a prepayment penalty. So generally speaking, hard money loans are short term. Either they are used as bridges into more permanent financing, or a situation where you're only going to hold the property for a short period. Generally, the interest rates are higher because the risk is higher, or the loan is only going to be held for a short period of time. And also, in most situations, the loans are interest only. So you're only paying interest, you're paying a monthly interest payment, which means the principal balance isn't decreasing over time. And so as you go to either refinance or sell the property, you will still owe the full balance of whatever the loan is.
Okay. And you mentioned short term. What are what's the shortest term, and what's the longest terms?
Generally, you can go from anywhere 3 months all the way up to 3 years.
Okay.
So usually beyond 3 years, you won't likely see a hard money loan.
Okay. Presuming you take into account the property itself, credit scores, can you tell us a little bit about that?
Yeah, so in general terms, hard money loans are what is considered an asset-based loan. So a lot of emphasis is put on the property and the deal itself.
Okay.
However, a lot of lenders are still going to want to get a little bit of information about the borrower. So usually the credit requirements are fairly low, but credit will be still taken into consideration, also the person's experience. So if you have, a hit to your credit score, hard money loans are definitely an option, because there is still a lot of emphasis on the property and the deal itself. So as long as the numbers make sense in the deal, usually something can be worked out.
Okay. What kind of down payment are are you looking for most properties?
Down payment can range anywhere from 10 to 25%, depending on the type of property and the situation. There are certain situations where a down payment may not be required. I have seen those situations as well, but it's kind of rare, so I would at least plan for 10%.
If somebody were to apply with your company, how fast does it take? You do a similar process like a pre-approval, so how long would that take?
Yeah, so depending on, in most situations, we won't need to do like a pre-approval. We'll just go straight into underwriting. So typically for hard money loans, it doesn't take very long to actually close. I mean, in some situations, we can close in a few days, and it can go to 2 or 3 weeks.
Okay, so in terms of pre-approval, you're still like we're looking at credit, and somebody needs to, they need a letter of intent from you, or so that's they could get that.
Yes. So usually we can do that whole process in a few days.
Okay. All right, you mentioned an example of having a zero down payment loan. That's pretty interesting. Can you elaborate on that? What sort of examples have you seen of that?
Yeah, generally I've seen those when the loan amount is fairly high, so we're looking at plus $1 million. But usually in those situations, we're taking into account what the after repair value is going to be. So if someone is doing a large rehab project or has a construction project where they're adding a great level of value and equity into a situation, in those types of conditions, a down payment may not be required because we're going to take into account the equity that is being built into the deal.
So that's even equity that the person, let's say they're either doing sweat equity or they've got contractors who are going to, that's even that equity too. You're not considering already existing equity where it's a great deal already. It's 50% LTV, loan to value, and then but you also look at what they're putting into the deal.
Exactly.
Okay.
Exactly. Yeah. So that's a great example. So if someone has an after repair value that's going to be $4 million, and they want to lend 50% loan to value, we can do $2 million, and so that's kind of how we look at the situation.
Okay. You're also taking a primary lien position?
Correct. Yes.
Okay. And you mentioned we talking about 2 million, 4 million. Do you have any upper limits, minimum loan amounts, upper loan amounts?
Usually for residential properties, we're looking at a 50K minimum. For commercial, we're looking at 100K minimum. And really, the upper limit is pretty high. We're looking at the several millions of dollars.
Okay, and then it's a good segue into you're talking about commercial and residential in the conventional space. I mean, you've got your commercial loans. They're quite different than your residential loans. So the residential 2 to 4 units, do you have that distinction, or is it the same type of loan product applies regardless of commercial or residential?
Generally speaking, all of the loans that we do are still considered commercial, even if you're doing, working with residential properties, because we require that they are in an entity, and so they're going to be loaned in a business. The terms and everything are going to be very similar. The only difference is going to be those minimum loan amounts.
Okay, so you mentioned in an entity, you mean like an LLC, S corporation, C
Correct.
corporation. So that's even another helpful thing for investors too. I mean, a lot of with your conventional loans, generally the conventional lenders don't want you to be an LLC. They want you individually on the deed. But in this case, that's an extra advantage for that.
Yes, exactly.
You had mentioned repayment terms. We talked about interest only. I guess it's optional on the buyer to, if they want to pay more, if they want to pay down the principal as well. I mean, are you able to calculate that up front, or you just as they get to do that however they want to do that?
It's a case-by-case situation.
Okay.
Yeah, we can look into that if someone is interested in doing that. Generally, most people like the interest-only payments because it helps keep the payment low while you're in this transition phase, and so you're not having to pay additional money. If you're planning to sell the property, or if you're planning to refinance it into something that's more conventional, most investors like to keep their payment as low as possible during that time period.
Okay. Let's say someone does start off with the intent of, I'm going to get a loan, I'm looking for a fix and flip, but then they look at the property later and, based on the value add, and they think they can get better rents. Are you able to refinance? Do you refinance them into a conventional loan that, longer term, 15-year, 20-year, 30-year, or how does that work with your company?
Yeah, definitely. So we can do refinances. We can even do cash out refinances. So if someone has built equity into the property and they were planning to sell it, but then they change their strategy and want to hold it, we can refinance it and let them cash that equity out. And then we, of course, can do purchases as well.
And so the cashing out, those include, you know, a 20-year loan, 30-year loan,
Yeah,
up
so
to
we
the
can go
full?
all the way up to 30 years, yes.
Okay. And do you hold all the loans on your books, or do you also broker some of the loans?
So most of the loans are going to be held by the actual lender. So we would broker those out
Okay.
and they would hold the paper.
And how many lenders do you work with, private lenders?
So we do real estate loans and also small business loans. So total we have about 50 lenders that we work with. On the real estate side, I would say it's about 15 to 20.
Okay, very nice. You mentioned small business loans. Can you care to share some information about that?
Yes, on the small business side, we have a wide range of loans as well. We can do asset-based loans where a company can use their invoices as collateral, also inventory and equipment. We can do equipment financing. We have some unsecured lines of credit for businesses and a few other things, but those are some general loans that we offer.
So talking about the loans, you had mentioned interest rates are higher earlier. I mean, in terms of your short term, your hard money loans, what kind of interest rates are we looking at there?
Generally speaking, they start in the high single digits, so maybe 7, 8%, and can go well into the teens, so 12 to 14%.
What's the reason for, you know, a low interest rate and a high interest rate? Is there, you know, is it based on the property? Is it based on the borrower?
Yeah, generally speaking, it's going to be based on leverage, so loan to value, also borrower experience plays a role, and sometimes FICO score, not in all situations, but those are the key elements of determining what that interest rate is going to be.
So you can get a loan to, I could, you know, if I wanted to go, I found a property that's an ideal fix and flip, I can get the money to buy the property. Are you also lending so I can, you know, pay contractors, hire contractors to do repairs? And if so, then how's that done? How's that handled over time? Do you give all that money up front? Do you do draws?
Yeah, so we can fund the purchase and the rehab in that situation, and generally we go up to 90%. So we'll do 90% of the total project cost, which is the purchase plus the rehab. The purchase funds are dispersed to the seller at closing, and then whatever you have set aside for your construction or your rehab will go into an escrow account, and we work on a draw system. So as the work is being completed, you can request a draw and get that money for that particular piece of the work.
Okay. For each draw, are you requiring invoices? Are you requiring some sort of milestones or just?
No invoices. We have an inspector come out just to make sure the work is completed. We don't require that you use, specific contractors or anything like that. You can do the work yourself. We just want to know that the work has actually been completed, and then you can have the draw approved.
Okay, great. And when it comes to the actual loan approval process, you mentioned underwriting before. Is there a committee? Are you part of that committee, or how does that work in your company?
No, I'm not part of the committee. I do like a pre-assessment, so I'll collect all of the documentation and kind of look over the deal, make sure the numbers and everything make sense, and then I submit it to the underwriting team, and they actually do the full assessment. So they'll pull the credit, they'll run the numbers, and make sure that everything's okay. In most situations, we do require an appraisal, so that'll be ordered. And generally, like I was saying, it usually takes a couple of weeks to close everything.
Okay, you mentioned appraisals and who pays for the appraisals, and I guess are there other upfront costs that the buyers need to expect?
So the only upfront cost generally is the appraisal, and the buyer is responsible for that in most situations. There are some situations where the lender will pay for the appraisal. So that's the only thing that would need to be paid prior to closing. At closing, for hard money loans, usually you're going to have to pay fees, which are loan origination fees or points for the hard money loan. And those can range anywhere from 1 to, I've seen it at 5. So
5 points?
Yeah, which is a percentage point of whatever the loan amount is.
Okay, and the reason for the variance in the loan points, is that based on risk as well too?
Well, it's based on risk. It's also based on lender and situation, depending on the loan size, things of that nature. If you are at a lower loan amount, your points are likely going to be higher versus if you're at, a million plus or like a higher loan amount, you'll pay a lower percentage point, but of course the fee is going to be higher in general because the loan amount is higher.
Okay. Do you handle all your own closings, or do you work with a title company?
We allow the borrower to choose their title company.
Okay.
So they can choose whoever they want to work with.
Do you service all 50 states, or is there any limits where you do not service?
Yeah, so in We can definitely lend in most states. There are certain situations that are a little bit more difficult. One of those off the top of the head is like North Dakota. So some, random states we have some restrictions in, but for the most part, we can lend in any of the 50 states.
Okay, great. And how can buyers get in touch with you if they're interested in chatting with you and finding out more about your loan products and company?
Yeah, so you can reach me at info@C as in cat, S as in Sam, capitalsolutions.com, or you can visit the website, which is www.cscapitalsolutions.com.
Great. Yeah, and if you're listening to this podcast through my website, I'll definitely leave your contact information there, and leave a couple of your social media profiles too.
Perfect.
But again, thank you for being on our podcast. Enjoy the rest of your day.
Yeah, thanks for having me.
Thank you.
Awesome.